Yes, g'day to one and all. So, this following episode is recorded for the purpose of entertainment. There is no specific call to action for financial advice or nutritional changes or any health related aspects. This is recorded simply for your entertainment, for your life satisfaction, and our ongoing fulfillment. It- So, we'd just like to confirm that. And thanks very much. Keep enjoying. Thanks kindly. Yes, indeed. Here we go. Another episode, episode 4 now, a mini episode in some ways of the first and final podcast with Shivu. It's me, your humble and genuine host here. Essentially, what I want to really get it down to is people's investing philosophy. I really feel that the philosophy that you have in terms of where you put your expendable income is really something that will directly influence your wealth for life. I feel like for me, I understand intimately managed funds and ETF products. These are things that I have always felt close to, just because this is where I've worked mostly in my career. I feel that the transformative power that managed funds and ETFs have is really second to none. This is something that a non-sophisticated person who doesn't understand finances at all can really gain a lot from. Like if you have a spare, I don't know, $500, $400 even from each paycheck, and if you can be disciplined and commit that to your managed funds and ETF account, you're going to see really your best bang for your buck. Because let's face it, in the stock markets, most people are going to suffer losses that are going to scare them. The retail investor, the mom and pop investor, the average Joe investor cannot stomach sizable losses. And this is proven in study after study that when you have a sizable loss early in your journey of investments, you will be put off by it. You will have scar tissue, you will be scared. And you'll have PTSD, and you won't be able to pull out when you need to, or you won't be able to pull the trigger when you need to get into a stock when you need to, and that's just a fact. And so I say to everyone, if you're getting started in your investment journey, go ahead and start off with training wheels. Get into managed funds and ETFs. Firstly, the great benefit of them is you can see pricing for time periods that are quite sustainable. Like you can see how a product has been tracking for years and years. And for example, the one of the most famous products is QQQ, investor code from Invesco, and this one people track religiously. They check the pricing of it daily, and they make sure that there's some visibility on it, because it serves as kind of a placeholder for the health of the market, especially when it comes to the technology and high-tech sectors. The QQQ is used as a stand-in by many analysts for that. So I feel that what you need to do is make sure that you get into these easier products. They're easier to understand. You can see the composition of an ETF or managed fund. It might be complicated in terms of what a portfolio manager will want to include in his basket of securities or include in his in the underlying assets. But for the investing public, these are things that anyone can get into. These are things that anyone can get a slice of. So I would recommend that in the first instance. Now, I'm not going to be like a certain podcast host for girls who invest called Simran Kaur and just give you generic and really vanilla advice. I really feel that doesn't help you. I really feel that isn't what you're looking for from your content anyway. I want you to go out and use your nous and use your intelligence and figure out like what product is useful for you, what is in your wheelhouse. For example, if you're someone who kind of keeps tabs on international news, maybe you will know the names of certain stocks, and you can go away and find out which managed fund holds that stock or holds that company as an underlying asset, and you can go away and figure out, okay, I'm a car head. Yes, okay, let me go away and buy some EV makers. Let me keep some traditional car makers as well. These are things that anyone can do. These are useful elements that can get you going and get you started. And what you really want is you want to rack up small incremental wins. You're not going to go out and I assure you this is not what's going to happen. You're not going to go out tomorrow and take whatever little dispensable income that you've got and you're going to become a millionaire tomorrow. It's not going to happen, and if it does, it's really beginner's luck, and you should celebrate it. But it's I don't want to sell you a funny utopian image anyway. We want something sustainable. We want something that can be replicated. That's what's most useful. So go away and just figure out, okay, for example, like you have the feeling that you like gaming, and I'm against gaming, but that's neither here nor there. And so you know that Rockstar Games is going to release GTA 6. So you're there and you're checking out the developments behind GTA 6. You're looking at release dates and where they are in terms of releasing it. And then you may want to go out and buy the underlying company's stock. This is something that someone who is closer to that topic will certainly feel great satisfaction when GTA 6 finally does drop. You're going to see a huge increase in that company's stock for a while. So yes, indeed, these are things that are replicable, and they're also very sustainable. So yeah. Now, when you get more advanced, obviously you want to try and, I would say, making your first $10,000 is should be your first goal. You should try and say, whatever I've got, I need my first barrier. My first benchmark should be making that first $10,000 just from gains alone. And from there, then you can say, okay, let's get to 50 now. Because if you can get to 10,000 from gains, you can get to 50,000. It's only a 5x from that. So what you need to do is realize that there is, as you go through every checking point and every marker, there's going to be different investment products that open up to you. Once you reach a certain amount, then you get to be considered a wholesale investor. Then really you can make real money in that space. You can hedge your portfolio. You can go away and take chunks of your portfolio and diversify. Diversification is, I can't speak enough on it. I think it's a really super vital and ultra important aspect of portfolio management for any investor, from a billionaire all the way down to a regular working class dude who's trying to get started. So I'll tell you that. Diversify. Don't put all your eggs in one basket. Sometimes, there are so many stories online of people who put everything in Bitcoin, and then Bitcoin crashed, their stomach got weak, they sold out, and they lost a lot. They lost essentially all the extra money that they'd ever worked for in their lives. So these are just horror stories, but these are true stories too. So what I'll say is diversify. Put some in cash. Put some in bonds. Put some in property, or at least property shares. Put some in managed funds and ETFs. And then if you're getting good, if you're getting a bit smarter and wiser, then put some in stocks. I won't tell the average person to get into stocks straight away. You're going to get hurt, you're going to get scared, and you're going to turn yourself off to many blessings and opportunities in the future. And ultimately, that's not good for you. So yeah, that's what I'll say on investing profiles and philosophy. Where I'm at, I love my managed funds and ETFs, but I also have a strictly American stocks portfolio that I don't really touch. I kind of set and forget it for a year at a time. I'm really investing there. I'm not trading it at all. I've done my research. I've read the annual reports. I've read all information that's coming out from that company. And then I've said, okay, I can see this segment's going to grow. This company is a major player in this segment. I can go away and take this one. Now, it's a top-down approach in terms of I look at a macro perspective. Firstly, I want to identify the industry. We live in an age now where everything AI-related is popping off. So you really want to see, which aspect of AI is really hot right now? Which one is really working? Maybe it's a learning language model tied to a company that you're really looking at, or it could be like some specific piece of software. Maybe it's in audio, or it's in some kind of art or graphic design feature company. So you really want to drill down from the top to the down. That I feel is the best approach. If I can tell anyone any approach and that I can hang my hat on, it's that top down. Go from, firstly, you want to see the macro perspective in terms of the economy. Then you want to see the industry. Then you want to see the company. Then you want to identify how closely this certain stock is moving with that trend line. So like if I'm saying, for example, okay, I really think I just want a pure play AI company or stock. Then I want to actually find out which companies are actually just working in AI. There's many companies that have AI aspects, but then many that are part of a larger company that aren't really following the specific trend line of AI in general. So you want to find a company that's really looking at that aspect closely. And then you want to drill down. You want to see that their metrics are looking good. You want to see the price to earnings ratio. You want to see EBITDA. Most importantly, for these companies, you want to see what's in the pipeline. What's coming next? What do they have loaded up? Because AI is still such a baby and fledgling industry in itself that a lot of the real gains and future earnings are coming in the near future or foreseeable future at least. So you might need to go out and read like what the CEO or the chief information officer is saying about it. Just to try and give yourself a heads up. I know that's precisely what I did with Nvidia a few years ago, where I felt like, this company is solid. Like this company has good contracts in itself. This company has got a good framework surrounding gaming chips, but they're pivoting away and they're trying to make really high-end chips for the oncoming AI revolution. And at first I didn't really buy it. I didn't truly understand it. I was like, this is quite a big jump. Like you're going from making, like regular gaming chips for laptops, and then now you're going to be making like really high-end stuff. Like, like pretty much going from like I guess if it was a car manufacturer, you'd be going from making a Toyota Camry to a Tesla Model Y. Like a huge leap. But they managed to do it, and I was convinced by the CEO. He'd really spoken well. He's a very charismatic and informed person in this field, Jensen Huang. And I feel like, I got convinced. But I got convinced after reading more literature on them. And then the rest is history. The Nvidia has been the prize darling of my portfolio for the last 2 to 3 years, and I'm very grateful to them, and they're doing great work. And Jensen Huang, you deserve a cold beer from me, my friend, and you've done really well. And keep going. I have to say that they're a remarkable story because they were already a mature company. They weren't starting out. They didn't come out of nowhere with like a lot of frills and a big bang. They just came out with a decent product to address a market that was evolving quickly. And they're the hottest company in the world for a reason. And it'll be fascinating just as a casual layperson, just to see what happens in that space. I think it's super interesting. There could be a future where we have we could have AI really intimately involved in how we live in a way that we can't even truly imagine just yet, because it's still developing, it's still evolving. And it's just an exciting time to be alive. Yes, indeed. So that wraps up our little mini episode here, episode 4 of the first and final podcast with Shivu, the Alpha and the Omega. I appreciate you all, and we'll be back doing some more content soon. And I hope this is really, agreeing with you and you're finding something useful out of it. Thanks kindly.